Hello and welcome back, students. So, in today's class, we will be studying about the fundamentals of partnership. This is the first chapter of your partnership accounting, where we will study about the basics of the partnership, and we'll also study how a partnership business starts. And apart from that, what are the accounting treatments of different items which are related to the partners. So, as you have already studied in your 11th grade, that at the end of the accounting procedure comes the financial statements, that is also known as the final accounts. In the final accounts, we have to prepare two main things, in fact, three main things. The first one is the trading and profit and loss account. The second one is the balance sheet. So if I differentiate that, the first thing is your trading account, which is solely responsible or solely related to the factory expenses and factory incomes. Next, if I talk about the profit and loss account, it relates to all the expenses and incomes which are done in the office. Okay, and the last one is your balance sheet. In the balance sheet, all the assets and liabilities appear, which gets tallied at the end of the day. Now, let's talk about the trading count. In the trading count, we used to calculate the gross profit. Next, in your profit and loss account, we used to calculate the net profit. Now, when I'm talking about the partnership business, in the partnership business also, the first account that has to be prepared is the trading account only. And the second account which has to be prepared is the profit and loss account only. But there are some of the expenses and incomes which are related to the partners, which are in connection with the partners, which we have to pay to the partners. So all those expenses and all those incomes are to be treated separately. For that, for the expenses of the partners and the incomes of the partners, we have to prepare a profit and loss appropriation account. Now, the thing is, in the profit and loss appropriation account, as we used to transfer the gross profit from trading account to the profit and loss account, likewise, the net profit now will be transferred from the profit and loss account to the profit and loss appropriation account. Is that okay? Now, if this is very much clear, so the profit and loss appropriation account starts with the credit side. On the credit side, the first item that has to be written is your by profit and loss account, and in the bracket, you will have to mention that this is your net profit. So this is the first thing which appears in your profit and loss appropriation account. Now, after this, all the expenses, as we have already studied in the profit and loss account and trading account as well, all the expenses are to be written on the debit side of the profit and loss account and trading account as well. Likewise, same is the format of your profit and loss appropriation account. Now, profit and loss appropriation is basically the extension of profit and loss account. So why do we make it? Because just to bifurcate the expenses of the partners and the normal office expenses. So now what happens is, all the expenses relating to partners, such as sometimes we provide the salaries to the partners. Now a question should pop up in your mind, that why does a partner get a salary? Obviously, he is the owner of the business. He should get the profit. Why is he getting the salary? Because suppose there are three partners. So all the three partners will have a different type of role which they have to offer for the business. For example, suppose there are three partners with the name A, B, and C. So A has got the duty of sitting in the office like an employee and serving the clients or the customers. Now, B and C are responsible for the outside of the business. That is, they will go out and search for the clients, and they will make the clients comfortable, and they will ask them to go to the office. So because they are working as an agent for the business, so they will get the commission. So that's why different partners have different roles for their work. That's why they get the salary and the commission as well. So the first thing which will appear on the debit side of the profit and loss appropriation account will be the salary. So it starts with to salary account. Okay, now since there are three partners, might be possible that all of the three might get the salary, or else of them two are getting the salary, or only one is getting the salary. So let's take a imaginary figure. Say all the three of them are getting the salaries. So we will write to salary account, and below that we will have to write the names of the three partners with their respective salaries in the particulars, that is the inner column itself. Next, now just imagine if you have some money, and if you invest that in your bank, if you make a FD out of that in your bank, so what will happen? The bank will provide you with the interest. The bank will give you the interest. Now, if the bank is giving you the interest, so it's an income for you and an expense for the bank. Likewise, if at all the business owners, that is the partners, provide the capital to the business in the form of loan, so they also get the interest on that. So the next expense which is related with the partners is the interest interest on capital. So after writing down the commission, we will write to interest on capital account, followed by A, B, and C with their respective account amounts, and a total amount will appear in the amount column. So these were the main three expenses which are related with the partners. Okay, now apart from that, if there is any of the income, if there are any of the incomes, like the example for the income is interest on drawings. Now, as we have already studied in the 11th chapter, 11th grade, that all the incomes are to be written on the credit side. Apart from that, if a partner has put in some of the capital into the business, he will get an interest out of that. That is known as the interest on capital. Now, if a partner has withdrawn some of the amount from the business, so what will he give? He will have to give the interest on drawings. So that's why an interest on drawing given by the partner to the firm is an income for the firm. So this particular thing will appear on the credit side with the name by interest on drawings account, and it will be followed by again A, B, and C with their respective amounts, and total amount will come in the amount column. So this was the general theme of your profit and loss appropriation account. Apart from that, suppose what happens is, obviously a partnership firm or any business, when it earns more, they want to keep some amount as a reserve. They want simply to keep some of the amount as reserve for the future mishappenings. So the amount which has to be transferred to the general reserve will again appear on the debit side, as this is a kind of an expense, not an expense basically, but it is reducing the profit. That's why it will appear on the debit side, but it will not have ABC because it is not being given to the partners, but this will be shown directly in the amount column. This is the amount which is not being distributed among the partners, but is being kept as a retained earnings into the business itself. Next, after this, as we used to close down the profit and loss account and we used to ascertain the net profit, likewise, the profit and loss appropriation account again will be closed down. And this time, if at all the credit side is heavier, so you will get a balance on the debit side. So the balance which will appear on the debit side is known as the divisible profit, or else the distributable profit. Now this ultimate net profit, this ultimate divisible profit is then distributed among the partners in their profit sharing ratio. Obviously, if we talk about a single owner, that is the proprietorship concern, there was only one owner who used to get the full amount of profit. But this time there are more than one partners, so obviously they will have some ratio. So in that ratio only they will be sharing their profits. So at the end of that, we will have to write to profit or to gain transferred to. Next, after that, it will be followed by the A, B, and C, and we'll distribute the profit, divisible profit, in their respective profit sharing ratios. Okay, and the ultimate amount will again appear in the amount column. And after that, we close the account. With this, we have finished the profit and loss appropriations format with the items which appear into that. Now, there is one more thing, very important items. There are four main important items which do not appear in your profit and loss appropriation account. So what are these? The four items which do not appear in the profit and loss appropriation account are: the first thing is the manager's commission. You might find in some of the questions that in the question they have mentioned there is a manager's commission. Now tell me one thing, why are we preparing the profit and loss appropriation account? The profit and loss appropriation account is just prepared so that we can write down all the expenses and incomes related to the partners only, specifically the partners. Okay, now just tell me one thing, if at all we are providing commission to the managers, so what will be the scenario? The manager is not our partner, that's why his commission should not appear in the profit and loss appropriation account. Obviously, he is a normal employee of our business, so he should be allowed commission and should be written in the profit and loss account itself. But the accountant has missed out to write down this in the profit and loss account, so that's why this has to be done a rectification. So the first item which do not appears in the profit and loss appropriation account is basically your manager's commission. Next, apart from that, the next item which does not appear in the profit and loss appropriation account is the rent. Now rent has to be shown in the profit and loss account only. Now this rent is being given to the partner. Now the question arises, as I just told you, all the expenses and incomes relating to the partners should appear in the profit and loss appropriation account. So why is it so that I am excluding the rent to a partner, even though the rent is being given to the partner? It is because what happens is, the partner is not doing something for the business. He is not doing for the business that he should get a rent. Look, he's working for the business. That's why he's getting a salary. He's again working for the business in connection with the business. So he's getting the commission. But the rent which is given to him because he's providing a building or an area for the work to us. So that can be taken from the outside person as well. So this time also, this partner will be considered as an outside person, will be considered as an external person from whom we have taken the area on rent and we are paying him the rent. Okay, so that's why this rent to a partner, he is not getting the amount in the capacity of the partnership. Okay, just understand this thing. जो भी रेंट हम लोग पार्टनर को देंगे वो पार्टनरशिप की कैपेसिटी में नहीं दे रहे, बस उसने क्या किया है, उसने उसने एक एरिया दिया है, बिल्डिंग दिया है, उसके पास खुद से थी, तो उसके लिए हम लोग उसको रेंट दे रहे हैं, इसलिए ये चीज यहाँ पर अपीयर नहीं होगी. Okay, now let's talk about the other two items as well. The other two items are, suppose there is a need of funds in the business. So obviously we'll ask the partners to put in some additional capital. But if at all the partner is not willing to give an additional capital, because the capital which is invested will be for more than a year, because the capital is the main amount of the business only with which the business works. Now the question is, if at all the firm is in need of an emergency fund, so it might take a loan from outsider, from the bank, and if the bank is not allowing the loan, so this loan can be even taken from the partners as well. Now just tell me one thing, what is the main aim, what is the main purpose of the partners? To introduce the capital. Now, if they introduce the capital, this is for the business, this is for the partnership, this is in the capacity of the partnership business. But if at all they are providing the loan, so they will be treated as an outsider, as if we have taken a loan from an outside person. And if we have taken a loan from an outside person, so the interest on that should also not appear in the profit and loss appropriation account. It should normally be treated as an expense in the profit and loss account itself. So the interest on loan also, which has to be given to the partner, is an external expense which is to be written in the profit and loss account. Now, the last item which has not to do with the profit and loss appropriation account is basically your interest on loan from a partner. Now, what happened is, as the firm might be in the need of money, might be in the need of funds. Likewise, the partner might also be in need of funds. So the partner might also take the loan from the business. So obviously, if he's taking the loan from the business, so he will have to pay the interest. Now, this type of interest will be an income for the firm. So again, the partner has to withdraw. If he wants to withdraw, he can withdraw in the form of drawings. And he wants to invest, he can invest in the form of capital, but not in the form of loans. So that's why this interest on loan as well will not appear in the profit and loss appropriation account. So these were the 4 items which do not appear in the profit and loss appropriation account. So what should be the accounting treatment if these 4 items appear in the question? So if at all these 4 items are getting appeared in the question, so the first thing we will have to do is, first of all, as I told you, in the profit and loss appropriation account, we have to write by profit and loss account in the bracket net profits. And I told you to write the amount in the amount column. But if at all there are these 4 items, so this amount, the profits amount, net profit amount, shall not appear in the amount column, but will be written in the inner column, that is the particulars column itself. Now from that net profit, in the inner column, that is in the particulars column itself, we will deduct all these items. That is, first of all, we will have to write by profit and loss account in the bracket net profit. And after that, writing the amount in the particulars column itself, the inner column itself, we will deduct the expenses like minus manager's commission, minus rent to a partner, minus interest on loan to a partner, plus interest on loan from a partner, because that's your income. So these items have to be done, have to be recorded in the profit and loss account, which the accountant forgot. That's why these items will be done. The adjustments will be done through the net profit itself. Okay. Now after that, after all the items have been written, so you will take out the final answer after adding and subtracting it, and after that you will write this answer, the amount, in the amount column. So this will be known as the corrected net profit. Okay. Now the question arises, what is to be done with the corrected net profit? That's the ultimate net profit which we have to write in the amounts column. It's as simple as that. And just remember one thing, the commission which is allowed to the partners will be taken out, the rate will be applied on the corrected net profit. It will not be applied on the original net profit which was given in the question, but the corrected net profit we have just ascertained it will be calculated on this credited net profit only. Okay, so just remember this thing. So this was the overview of the profit and loss appropriation account. I hope you have understood the full concept of profit and loss appropriation account. Now, next account that has to be prepared is the partner's capital account. So there are two methods to prepare the partner's capital account. The first one is the fluctuating capital method. The second one is the fixed capital method. In the fluctuating capital method, only one account, that is, after the preparation of profit and loss appropriation account, we have to make only one account after that, that is known as the partner's capital account. Okay, and when we talk about the fixed capital method, we have to prepare two of the ledger accounts after the preparation of profit and loss appropriation account. Those are, the first one is the partner's capital account and the other one is the partner's current account. So let's first study the fluctuating capital method. As per that, we have to prepare partner's capital account only. So now the question arises, from where do we start this thing? So this account is also started from the credit side because this is basically a liability for the firm. The capitals invested by the partners into the firm is a liability for the firm. That's why it will start from the credit side. Now, there can be two scenarios. The first one is, might be possible, this is a new firm, that is, the partners have just started the partnership business, or else this could be the old firm where the partners are running the business from the previous year itself. Okay, so if at all it is an old firm where this is a second year's operation or the third year, whatever it may be, so we will have to start with writing down the balances of the capitals which were there in the previous year, the closing balances which appeared in the previous year. So it will start with by balance brought down. So we will have to write the capitals of the three partners in their respective columns of their amounts. So this was the first thing which will appear on the credit side only and only if it is a old business. Now, if it is a new business, or else if the partners have introduced some of the additional capital into the business, so we will have to write by bank account. So we will have to write the by bank account and the respective amounts in their columns. So this was the starting of this partner's capital account as per the fluctuating capital method. Now, what happens is, when it is a time to give the amount of salary to the partners ask the firm just to reinvest the amount into the into the firm itself. That is, they want that the amount of salary they are getting, the amount of commission, the amount of interest on capital that they are getting should be reinvested into the firm by adding this amount into their capital itself. So what will happen now? So all the expenses which were written on the debit side of the profit and loss appropriation account now will appear on the credit side of the partner's capital account as well. So on the credit side, after writing down the by balance brought down if it's an old business and by bank if it's a new business, we will have to write all the expenses, all the amounts which were allowed to the partners. So we will write by salary account with the respective amounts in their respective columns, by commission account again with the respective amounts, and apart from that, by interest on capital which we had allowed in the profit and loss appropriation account again in their respective columns. So these were the three main expenses which were relating to the partners which we had recorded on the debit side of the profit and loss appropriation account. Apart from that, we had also mentioned a general reserve on the debit side of profit and loss appropriation account. But that will not be written in the partner's capital account because that's the amount which will be retained into the business itself. This amount is not being given to any of the partners, so it will not appear in partner's capital account. Apart from that, at the end, we had distributed the divisible profit. At the end, in the profit and loss appropriation account, we had distributed the divisible profit. This will appear in your partner's capital account with the name by profit and loss appropriation account because this amount was transferred from that account only. Okay, and it will be written in their respective columns of their accounts. Now, after that, there is one more item which appears on the credit side. Just remember that thing, that is the rent, because the rent which we allow to the partners has to be written on the credit side of the partner's capital account. Okay, so it will be by rent account and it will appear in the respective partners column. Next, apart from that, so these were the items which are to be written on the credit side of the partner's capital account. Now let's come to the debit side. So on the debit side, as when the business was started, the initial investment was done through the bank. So if at all the partner is withdrawing the amount, so this will appear on the debit side. So this will appear on the debit side of the partner's capital account with the name two drawings. Okay, so it will be two drawings which will appear in the debit side of partner's capital account. And if you remember, there was on the credit side of the profit and loss appropriation account, we had also written by interest on drawings. Okay, so this by interest on drawings now will be transferred, will be recorded on the debit side of partner's capital account with the name to interest on drawings account. And the amounts will be recorded in their respective columns. Now, there is one more thing which appears on the debit side of the partner's capital account, that is your interest on loan from a partner. If you could remember, if you could recall that there were four items which were done the adjustments from the net profit, which were not appearing in the profit and loss appropriation account. So the last one, the amount which we had added was the interest on loan from the partner. So this will appear on the debit side. This amount of interest will be deducted from the partner's capital account itself. So this was the last item which will appear on the debit side of your partner's capital account. And after that, while we'll close this account at the end, so we will have to write down the two balance carry down. As we close the account, we will close this account as well, and you will get the balances, the closing balances for that particular year. And the ledger accounts, the partner's capital account will then be closed. So these were the items which are to be appear in the partner's capital account in your partnership business. So this we did with the fluctuating capital method. Now let's come to the next method, that is your fixed capital method. Now why is it fluctuating and why is it named as fixed? Now what happens is, in the fluctuating capital method, as you saw, that all the items are to be recorded in the partner's capital account, which are fluctuating the capital amounts. Because when we wrote down the first item, that was the capital, and in that only we added the amount of salary, commission, interest on capital, and we deducted the amount of drawings and interest on drawings as well. So the capital keeps on fluctuating with each year, because all the expenses of the firm are added into the capital and all the incomes of the firm are subtracted from the capital. So that's why it is known as the fluctuating capital method. Now, the fixed capital method, with the name suggests that the capitals are to be maintained at a fixed amount. The capitals of the firm will be fixed at that particular amount only. So what does that mean? That simply means, here, let's come to the accounts, then you will be able to understand what I'm trying to say. So the first account that has to be prepared in this fixed capital method is the partner's capital account. In the partner's capital account, only the capitals appear. Only the amounts of capital which is being invested in the business appears in the partner's capital account. So let's start with the first one. Again, the format of the partner's capital account is the same as we did for the fluctuating capital. It is particulars A, B, and C. Suppose there are three partners. Again, particulars A, B, and C. So on the credit side, it will be by balance brought down if it's an old business, and by bank account if it's a new business, or if the partners have introduced the additional capital. So these are the only two items which appear on the credit side of your partner's capital account, because it is only concerned with the actual amount of capital, not the extra items like salary, commission, etc. Okay, so only the amount of capitals. Apart from that, on the debit side, the amount which has been withdrawn from the business out of the capital. Okay, there are two types of drawings. The first one is out of the capital. The second one is out of the profits. The normal drawings which a partner withdraws from the business is known as the drawings out of profits. And the amount he withdraws out of his capital, suppose he has an emergency in his home and he is withdrawing rupees 2 lakhs from his business. So it will be basically known as the drawings out of capital. So the drawings out of capital are only recorded in the partner's capital account as per the fixed capital method. So we will have to write to bank for this item, that is drawings out of capital. And after that, at the end, we will close this account and we will have the two balance carried down. That will be the closing capital account balances. Okay, with this, we have completed the format of partner's capital account as per the fixed capital method. Now, as I told you, there are two accounts which have to be prepared in this fixed capital method. The first one is the partner's capital account. The second one is the partner's current account. Now, in the partner's current account, all the items which were not recorded in the partner's capital account will now be recorded, like the salaries, etc. So this account may start. Okay, the format for this partner's current account is same. That is particulars ABC and particulars ABC. Now, this account can start with any of the side. It can also start with the credit side, as well. If it is starting from the credit side, so it will be the buy balance brought down again. So it will be buy balance brought down, and it will only record the amount of the current account balances. Look, in the question, you will get two of the amounts, the capital amounts and the current account amounts as well. So in the partner's current account, only the current account amounts are to be recorded with the name buy balance brought down, if it is of credit nature. If the question has mentioned that the current account balances has a debit balance, so you will write to balance brought down. So depending upon the side, you will have to write down the amounts. So this was the starting. Now all the items which were there in the debit side of the profit and loss appropriation account now will be recorded on the credit side of partner's current account. So it is by salaries account with the respective amounts in their respective columns. Next, by commission account, again with the respective amounts in their columns, by interest on capital, by rent account, and by profit and loss appropriation account for the profit which was distributed among the partners. So these were the items which will appear on the credit side. There might also be an item like when a partner has invested the amount of capital, he gets the interest on capital. So it has to be written on the credit side, but sometimes he also gets the interest on his current account balances as well. So this will also appear on the credit side of the partner's current account. So it will be written as by interest on current accounts. Okay, now let's talk about the debit side now. So on the debit side of the partner's current account, there will be drawings. Now these drawings are drawings out of profits. So it will be named, it will be mentioned, it will be written, recorded as two drawings only. Okay, after that, as we saw, there was two interest on drawings as well. So we will have to write two interest on drawings on the debit side of partner's current account, and also the two interest on loan from a partner on the debit side of the partner's current account. So these were the items which appear in your partner's current account on the credit and the debit side respectively. After this, at the end, we will have to calculate the net amount, the closing current account balances, as we did in the partner's capital account. Same for this as well. So it will be to balance carried down will appear at the end. Okay, and after that we will close down the partner's current account. So these were the two formats, these were the two accounts which have to be prepared in the fixed capital method. I hope these two accounts, the two types of account, the fixed capital method and the fluctuating capital method, are very much clear to you. So after preparation of profit and loss appropriation account, we have to check whether the firm is following the fixed capital method or the fluctuating capital method. Accordingly, the accounts have to be prepared. So now, as we have completed this, so from the next video, from the next class, we will be starting with the items, the calculation of the salary, commission, interest on capital, and the question as well. Thank you so much.